All right, let's get right into it. In the world of trading, there's this massive debate going on right now, and it's not about if you should be trading like the big guys, the institutions. Everyone kind of agrees on that. The real fight is about how. And today, we're going to break down the two main schools of thought. And believe me, they could not be more different.
And look, the stakes here are, well, they're incredibly high. Because you've probably heard the numbers, right? Study after study, all the broker data, it all points to the same brutal reality. Something like 95% of retail traders consistently lose money. That's not just some throwaway stat. It's the ground floor of this whole discussion. So why? What is the reason for this insane failure rate? Is it just bad luck? Or is there something else going on, like a specific mechanism behind the curtain? Well, the crazy thing is, both sides of this big debate, they actually agree on what the core problem is. And it has a name: liquidity engineering.
So, what is that? It's the idea, and again, both camps agree on this, that the big players, the banks and the hedge funds, are deliberately moving prices around to trigger all of our stop losses. Think about that. They're hunting for that retail liquidity to fill their own gigantic orders. They literally need us to lose for them to win. That's the game. And that right there brings us to the heart of it all. If we know that trading like the crowd gets you slaughtered, then the only path to actually making money long-term is to start trading with the institutions, not against them. So the central question isn't if we should do it. The real question is how. How in the world do we actually pull that off? Okay, let's dive into the first philosophy. We'll call it the path of simplicity. The whole idea here is to just strip everything away, get rid of all the complicated theories and indicators, and instead focus on just a few super repeatable patterns that you see over and over again. And this quote just nails their core belief, right? Complexity is the enemy of execution. Their whole argument is that trying to be a genius and predict every single tick of the market, that's exactly where we go wrong. The only way to really grow your account, they say, is through, well, ruthless simplicity. For these guys, the number one enemy isn't the market itself. It's something we've all felt. It's analysis paralysis. You know that feeling? You've got 12 different things on your chart, you're trying to track everything at once, and when the moment comes to pull the trigger, you just freeze. You hesitate. And poof, the move is gone. This whole approach is designed to kill that one specific enemy, your own hesitation. So what does this look like in practice? Well, they hunt for what they call ACB setups, which stands for ain't coming back. You know those moves, the ones that are just absolute rockets, these parabolic explosions where price just takes off and doesn't look back. The setup itself is dead simple. Step 1, find a key time, like the New York Open. Step 2, target a huge level, like yesterday's high. And step 3, when you see that parabolic move start, you jump on. That's it. You're not trying to be a fortune teller. You're just waiting for the market to scream its intention, and then you ride the wave. So really, their whole philosophy boils down to a few core beliefs. First, that markets really only do three things. They break out, they reverse, or they go sideways. That's it. Second, all that complex theory, it's mostly just noise that messes with your head. And your psychological capital, your mindset, that's your most valuable asset. And finally, the real secret is focus. Master one thing, like the NASDAQ, and stick to the higher time frames, because that's where the big clean moves are. All right, now let's flip the coin and look at the complete opposite approach. This is the path of complexity. And the argument here is simple. To beat a really sophisticated enemy, you need a sophisticated game plan. It's not about making things complicated just for the heck of it. It's about developing what you might call an institutional X-ray to see what's really going on. And this quote really sums it up, doesn't it? Institutional deception demands a commensurate level of analytical precision. Basically, the banks aren't playing a simple game. The way they engineer these moves is tricky. It's deceptive. So if you want to counter that, you can't just show up with a simple plan. You need real precision to cut through all that fog. The whole foundation for this approach comes from market legends like Wyckoff. They see the market moving in three distinct phases. First, there's contraction. This is when the banks are quietly, sneakily building up their positions. Then comes expansion. That's the engineered price move they've been planning. And finally, you get the trend, which is where they start taking profits. For them, knowing which of these three phases you're in right now, well, that's everything. And look, this isn't just about throwing a few more indicators on your chart. This is a whole, complete theory of how the market works. It's called Smart Money Concepts, or SMC for short.
and it has its own language to describe what the institutions are doing. You hear terms like displacement. That's a really strong, aggressive move that tells you a big institution just showed up. Or optimal trade entry, which helps you pinpoint the exact discounted price to get in right alongside them. And to get that kind of precision, this camp believes you need specialized tools. That X-ray analogy is perfect. A tool like liquidity lines isn't just a guess. It's designed to map out the exact price levels where clusters of retail stop losses are sitting. It's all about seeing where the institutions are going to hunt and turning those hunting grounds into your own personal entry points. So there you have it. Two really powerful but totally opposing philosophies. It really all boils down to a choice. What kind of edge are you after? Is it the razor-sharp edge of analytical precision or the ironclad edge of psychological mastery? And this really lays out the two battle plans side by side. On the path of simplicity, your tools are simple: time, key price levels, and specific patterns. Your enemy? Analysis paralysis. And your core belief is that your psychology is your edge. Now, on the path of complexity, your toolbox is different. Phase mapping, smart money concepts, proprietary indicators. Your enemy? Institutional deception. And your core belief is that precision is the ultimate edge. And this also highlights that they're really chasing different goals. The simplicity trader is kind of like a big game hunter. They're waiting patiently for that one massive home run trade that can totally change their account. But the complexity trader, they're more like a master architect, systematically building their account brick by brick with consistent, low-risk wins. They're focused on that steady accumulation you need to pass funding challenges and scale up. Okay, so we've seen both sides of the coin, the precision of a complex system versus the mental freedom of a simple one. But now we get to the most important question of all. So, which path is right? Which one is actually better? After hearing all of this, which one should you choose? And here's the twist. The answer is that there is no single best path. The most effective strategy has nothing to do with the market and everything to do with you. It all depends on which enemy you personally need to conquer. I mean, check out this final quote. It makes it so clear. Both sides are trying to get to the exact same place. They both want to mimic what the institutions are doing and use leverage to scale up. So the goal is identical. It's just the road they take to get there that's completely different. So this is the final question I want to leave you with, and you have to be really honest with yourself. What is your greatest enemy? Is it the market's complexity and all its deceptions? Or is it your own? Is it your own hesitation, your own overthinking, your own discipline? Because the answer to that question, that's what will tell you which path is yours to walk.